Hi, business owners. This is a pretty big update, especially if you're looking for funding to grow your small business. The SBA just changed how much financing an eligible business can potentially access when combining two of its major loan programs. Before the limit was $5 million, dollars, now we're talking up to $10 million in SBA backed financing. And I already know what some of you are probably thinking. Okay, where do I apply for $10 million? But hold on, because that's not how this all works. Every business isn't automatically eligible for $10 million. And this isn't a grant or free money. So I want to break this down exactly what changed, what these loans can be used for, what lenders are actually looking for, and whether somebody with a newer business should even be looking at this loan. The SBA announced the change July 7th after it became effective July 4th. First, let's clear this part up because I don't want everybody clicking off this video thinking the SBA suddenly created one $10 million loan. That is not what happened. We're talking about two different SBA programs. We're talking about the 7A and the 504. The new policy allows eligible borrowers to combine financing under those programs for a total up to $10 million. And that's important because these two loans can serve different purposes. So a business might need funding for operation or also might need funding for major changes like commercial real estate or equipment. That's where understanding the difference between 7A and 504 becomes very important. So you might want to make sure that you pay attention to this video. A 7A loan is much more flexible in terms of what businesses can use their money for. The regular 7A program currently has a maximum loan amount of $5 million. Now, depending on the loan and eligibility, funds can potentially be used for things like working capital, buying equipment, purchasing inventory, buying or improving real estate, refinancing certain business debt, or starting to expand a business. And that flexibility is why you'll hear so many business owners talking about the 7A loan. So let's say you built a company and now you're ready to expand. Maybe you need equipment. Maybe you need inventory. Maybe you want to buy another business. Maybe you're ready to purchase your own building instead of paying somebody else rent. Depending on what you're doing, a 7A loan could potentially be part of the financing strategy. But is the SBA handing you the money? And here's another thing I want to clear up. When people hear SBA loan, sometimes they think they're borrowing directly from the government. With a typical 7A loan, you generally working with an approved lender. The SBA provides a government grant on an eligible portion of that loan. So you're still dealing with underwriting. You're still dealing with approval requirement. And the lenders still need to believe your business can repay that money back. The SBA describes participating banks, credit unions, and other lenders as the institution that makes 7A loans under SBA guidelines. Now let's talk about the 504. The 504 is where things get really interesting for somebody who's trying to grow into physical assets. Maybe you're tired of renting your business location. Maybe you want your own office. Maybe you need a warehouse. Maybe your company needs expensive equipment. That's where I will start leaning more towards the 504 program. SBA 504 loans are designed primarily for major fixed assets such as land, building, and long-term equipment. The SBA currently lists a maximum 504 loan amount of $5.5 million, subject to program requirements. A typical 504 project involves a private lender financing up to 50%, an SBA-backed certified development company portion covering up 40%. And I want you to notice something. This isn't really the loan you're looking at because you need $20,000 to buy next inventory for next month. This program becomes interesting when you're talking about bigger long-term business assets. So if you're wondering, where does the $10 million come from? Now let's put everything together. This is the part I will put in big letters on the screen. 7A plus 504 equals potentially up to $10 million in combined SBA-backed financing for an eligible borrower. Before this change, that cap was $5 million. So the SBA doubled the amount of financing that an eligible business can potentially access across these two programs. And that's why this update is such a big deal. But now we need to get into the part everybody really wants to know. What does your business actually need to look like to qualify? Because simply opening a LLC, getting an EI, and opening a business checking account does not mean somebody is handing you millions and millions of dollars. Because I don't want anybody hearing $10 million and thinking, well, I have an LLC and an EIN, so where's my money? That's not how business funding works. Your LLC establishes the business. Your EIN identifies the business, but neither one automatically proves that your business can repay a loan of $10 million. Let's talk about credit first. The SBA itself doesn't give a potential credit score cutoff. And I know you guys don't like when I say it depends. So let me give you something you can actually work with. For many SBA loans, the individual lender's underwriting standards matter. And the SBA requires lenders to evaluate creditworthiness and repayment ability. In the real world, if we're talking about traditional SBA financing, I would personally want my credit score somewhere around the mid 600s or even higher before I started this process. A score around 680 or above can put you in a stronger position with many lenders. This does not mean 680 guarantee. That does not mean 680 guarantees an SBA loan. And it doesn't mean somebody at a 640 automatically gets denied. I'm giving you a realistic target, not a guarantee approval number. And remember, owners with significant ownership interest may have their personal financial profiles reviewed as part as underwriting. And this is another thing that I would like to clear up. Having business credit does not necessarily mean they're never going to look at you personally, especially when we're talking about a smaller or newer business. Your lender may review both the business and the owners behind it. So if your goal is eventually getting serious business funding, I will work with both personally. I'll keep building my business credit, but I'll also keep my personal credit clean as well, because I don't want to build this beautiful business profile and then have my personal credit become the thing holding me back from getting business funding. Now, here's something I think is actually more important than people realize. Can the business afford the loan? Because imagine walking into a lender asking for $500,000. They're going to want to know, how are you going to pay us back? That's where your financial statements become very important. A lender can evaluate things such as your business revenue, your existing debt, cash flow, tax returns, balance sheets, profit and loss statements, debt obligation. And this is why I always tell business owners, stop treating your business finances like they're not important until you need funding. If you're making money in your business, I want that money documented. I want clean books. I want a clean business bank account. I want my taxes filed correctly, because eventually somebody might ask you to prove these numbers. And speaking of bank accounts, if I was building towards SBA financing, I absolutely would have a dedicated business checking account. I wouldn't have cash app deposits, grocery purchases, my light bill, and business revenue all mixed together in one personal account. That would just make things very complicated. I want the lender to be able to look at my business and understand what's really happening. That doesn't mean opening a business checking account magically gets your business approved, but it helps me run the business like an actual business. And that's the mindset I want if I'm eventually asking somebody to lend my company hundreds of thousands or potentially millions of dollars. Now let's answer the questions I know everybody is going to ask. Info girl, I just opened my LLC. Can I qualify? Having a new business does not automatically disqualify you from every asset loan. But here's where I need y'all to understand realistically. A brand new company won't have years of business financials for lenders to analyze. That can make underwriting more challenging. So if I started my LLC last week with no revenue, no customers, no business history, and $100 in my business checking account, I'm not building my entire plan around getting 5 million SBA loan next month. I mean, that's just realistically. I'm going to focus first on building the company for a new business that can mean establishing revenue, clean bookkeeping, business banking history, customer history, positive personal and business credit, a realistic business plan and projects, realistic business plan. Then when I approach lenders, I actually have something to show them. And this is the part people don't talk about enough. Big business funding comes with paperwork. Depending on the lender, program, and transactions, be prepared for requesting involving things such as your personal and business tax returns, business financial statements, profits and loss statements, balance sheets, business debt schedules, ownership information, business license, information document, personal financial information, business plan, and if you're buying property, equipment, or another business, there can be additional transactions, documentations that is needed. So this isn't one of those put your EIN in, click submit, and wake up tomorrow and you have $500,000. SBA lending is completely different. Now let's talk about collateral because people hear SBA and sometimes assume these loans don't require anything, and that is just simply not true. Collateral requirements can depend on the loan type, amount available assets, and lender's SBA requirement. For 504 financing specifically, the assets being financed generally play an important role in securing the transaction. And remember what we talked about earlier with the 504, we're talking about things like estates, buildings, and major equipment. So if I'm financing a commercial property, the property itself is part of the transaction. Now, if you're wondering, do you need money down? Yes, this is another big one. Don't automatically assume that because the SBA backs the loan, you don't have to put any money into your deal. With a typical 504 structure, the borrower generally contributes to at least 10%, while certain transactions can require higher borrowing amounts. So let's say you were talking about $1 million project. 10% of $1 million is $100,000. That's why when we're talking about large business financing, you have to think differently. We're not just talking about what's my credit score. We're asking, is my entire business financial ready? Let's bring it back to the $10 million headline. The new rule means an eligible borrower can potentially combine 7A and 504 financing up to the new limit. It does not mean every borrower is going to qualify for $10 million. The business still has to meet program requirements and lender underwriting standards. The financing also has to fit legitimate eligible business purposes. If I'm borrowing millions of dollars, the lender wants to see a business capable of supporting millions of dollars in debt. That's why I don't want y'all chasing the number. I want you to build the business profile that will eventually qualify for bigger numbers. All right, so now we know what the SBA changed, and we know that simply having an LLC and EIN doesn't automatically qualify you for millions of dollars. If I had a business today and my long-term goal was getting access to serious funding, whether that's 50,000, 100,000, 500,000, or eventually millions, what would I actually start doing? Because I wouldn't wait until I desperately needed money to start to get my business together. I'll start preparing before I needed the loan. First thing I'm doing is making sure my business information is consistent. I'm checking my LLC registration. I'm checking my EIN information. I'm making sure my business is active and in good standing. I'm making sure my licenses are handled if my type of business requires them. And I'm making sure I'm using the same basic business information everywhere. Why? Because when you're applying for financing, you don't want unnecessary inconsistencies creating questions. If my business name is one thing with the state, something significantly different with the bank, and something completely different on my application, I'm cleaning this up. I want my business to look organized because it is organized. Next thing I'm doing, business bank account, and I'm actually going to use it. This is where some business owners get themselves into trouble. They open a business checking account because somebody on YouTube told them they needed one. Then they continue putting all their business income into their personal account. No. If customers are paying my business, I want the business revenue flowing through my business account. If I'm paying legitimate business expenses, I want those expenses properly documented. Because eventually, if I go to a lender and say my business makes $200,000 a year, I need financial records that support what I'm saying. And remember, opening an account doesn't automatically build some magical banking score that guarantees a loan. The bigger point is creating clean financial records. Now, this is something I wish more people talked about when they're talking about business funding. Everybody wants the business credit cards. Everybody wants the $50,000 limits. Everybody wants the $100,000 loans. But nobody wants to talk about the bookkeeping. Nobody. And I mean nobody. How much money did my business make? What did my business spend? What's my actual profile? What debt does the business already have? What assets does the business own? If I can't answer the basic questions about my own company's finances, I'm not ready to sit across from somebody, ask them from $500,000. I'll make sure that my bookkeeping is currently thought out the year, not try to reconstruct everything the week before applying. And this leads directly into taxes. If I'm building business with the goal of eventually getting serious financing, I'm not ignoring my tax returns. Depending on the lender and transaction, tax returns may be part of the documentation used to evaluate a business. This is why I'm careful about this idea of trying to make my business look like it makes absolutely nothing just to avoid taxes. I'm not saying pay more taxes than you legally owe. Absolutely use legitimate deductions you're entitled to. But understand something. The financial picture you're showing on paper can matter when you're asking somebody to lend your business money. That's an important conversation for business owners. Next, I'm protecting my personal credit. And I know we're talking about business funding, but especially while my company is smaller, I'm not assuming my personal financial profile doesn't matter. So I'll be working on paying everything on time, keeping revolving balances manageable, avoiding unnecessary applications, checking my report for legitimate errors, managing existing debt. Because imagine spending 2 years building your business and then finding out your personal credit is making your financial options more difficult. I'm working on both at the same time. Now we can talk about business credit. But I wouldn't go open 15 net 30 accounts just because somebody told me that's how you get $100,000. Just no. I'm looking for accounts that actually make sense for my business only. If I'm using business credit, I want to understand, does the creditor report? Where does it report? Does the account actually help establish a business credit history? Are these unnecessary fees? Am I buying things I don't need just for the sake of saying I have a trade line? Because I'm not spending $1,000 on stuff my company does not need just to chase a business credit score. Now we're getting to what I consider one of the biggest pieces. Make the business make the money. I know that sounds obvious, but sometimes we spend so much time talking about funding that we forget what lenders automatically care about. Are you paying the money back? If my business is consistently guaranteeing revenue, I'm building something lenders can evaluate. I'll rather walk into a bank with a strong revenue, organized, books clean, tax returns, and a healthy financial profile than walk in with 25 random vendor accounts and no customers at all whatsoever. That's the difference between building business credit and building a fundable business. Those two things can overlap, but they're not exactly the same. This is probably one of the biggest tips in the entire video. I wouldn't wait until my business account had $200 left in payroll was due Friday before I started looking for financing. When you're desperate, you may be more tempted to accept expensive financial simply because it's available. If the business is doing well and I know I'm planning in once my business is actually ready, then I'm looking for an SBA lender, and I'm not walking in saying I heard on YouTube they're giving out $10 million. So where do I sign up? I'm going in with a purpose. I know approximately how much money I need, what I'm using for it, how the financing helps the business grow, how the business expects to repay it, and how I'd have my financial documents organized. The SBA has lender matching services that can connect business owners with participating lenders, although matching does not guarantee approval. Let me give you an example because I think it'll make all of this a lot easier to understand. Say my business has been growing and I'm tired of renting. I find a commercial building that would give me my office space, storage, and room to grow. Instead of simply saying, I want a building, I'm putting together the numbers. What's the purchase price? How much cash do I need? What are the projected payments? What does the business currently pay in rent? What additional expenses come with owning the property? Can my cash flow comfortably pay it back? Now I'm approaching the financing conversation like a business owner instead of somebody just chasing the loan. For eligible fixed assets projects, that's where learning about the 504 plan becomes relevant. Now, I've got to say this because anytime there's big government funded announcement, the scammers come on out. Be skeptical of somebody promising guaranteed SBA approval. $500,000 with just your EIN number, no documents needed. Pay me $5,000 and I'll guarantee you funding. Nobody can guarantee you getting an SBA loan simply because you paid them. Please make sure that you do your research. Go directly to the SBA. Talk to legitimate lenders. And don't send anybody thousands of dollars because they made a TikTok telling you there's a secret government money. That's not true. If there's one thing I want you all to take from this video, don't chase funding. Build a business that prepares for funding. That's the difference. The new $10 million SBA limit is exciting, but I'm much more interested in what I can start doing today to make my business grow stronger. Revenue, records, taxes, credit, banking, cash flow, organization. Get those pieces together first. Then when the opportunity comes along, you're not starting from zero. Now, I want to hear from all the business owners. If you can get business funding right now, what would you use it for? What would you buy? Would you buy a building, buy equipment, hire employees, purchase inventory, or would you use it to expand into another location? Drop it below in the comments because I would love to hear from you all. Make sure that you like this video, subscribe to the channel, and I'll be sure to see you all in the next video. Until next time. Bye!